Hey, good evening traders. So it's been another interesting day in the markets. Fair bit of volatility to be fair. I hope you've been enjoying our recent content, and tonight we are going to focus on GBP pairs. The reason for that is seasonality behind British pound throughout the month of April. I'm just going to bring up a chart for you now. It's actually the thumbnail for this video, so if you're wondering what the chart is, then this is what it is. So here you go, you should be able to see the British pound seasonal analysis, and what this is highlighting is exactly how the market is moving throughout a traditional year. Now I'm just going to pull in my drawing tool and want to highlight that you generally see peaks in early February. You see lows pretty much late March, and then you see a traditional period of GBP strength through the month of April that forms a peak anywhere in between the final week of April and the first week of May. And this is the rally that we're looking to take advantage of. So we have pretty much true to seasonal analysis, we have seen this decline. Now the two different lines represent, one's a traditional seasonal period, meaning that it is like an average, and the weighted average just means it's a bit like an exponential moving average and a simple moving average. The weighted average is more heavily weighted to current year's data. So when we look at the charts, remember this is based around futures markets. So because it's based around the futures markets, that means that we are looking to buy pound in general across the spectrum, and then it's whatever fits the technicals that we can find will basically be how we look to use the seasonal analysis. And the way that the line moves in terms of magnitude doesn't necessarily mean that that's how far the market's going to move, whether it's 2%, 1%, whatever it may be. We're just going to use it as a timing tool. So we're looking to say, right, okay, the timing, the low of pound is going to be formed around the end of March, and the high of pound will be formed around the end of April, early May. So that's going to be our, we'll tie that in with our technicals, and obviously at the same point we want to say, well, if pound is up here somewhere come the end of April, and we can see it coming into structure, then fine, that's going to be a great time to be looking to not exit, but be very aggressive with your stop management, just in case it is where pound peaks and then starts to roll over. However, if price pulls up towards the 135s and is towards the end of April, then fantastic. Again, maybe you want to close it out because we are approaching a significant trend line, or you then just want to be more aggressive with your stop loss in case we see continued pound strength. So pound's been a funny one. We did send out an alert through here where we were looking for a potential 250 pip move towards the 135. Now that was on the analysis, you know, where we're looking at the seasonal strength and potentially the market had broken out. Now we have seen that we have seen a correction, and it does look like we've broken out. How we then look to trade this will be dependent on what happens over the next few hours. So what we've seen is price has, this is the 8-hour chart by the way, we've seen price put in a high and then a new high, so we have seen a potential shift in trend. Now we are looking at this as the potential first high or low, but again, like I say, it depends how the market is going to react around this area. We've seen an 8-hour close above this counter trend line. And if we drop down to the hourly chart, you'll see that we've seen price form a base, and it's also broken, as we saw on the 8-hour, this counter trend line. So we've got a rejection, a rejection, a rejection, and then a final breakthrough. And then we've seen 3 attempts at price getting through 130.66. There's also a monthly S2 pivot down here, which was acting as support. So we've broken through, we've now retested the trend line, and it's about how price is going to react here. So, you know, those that are looking at it more in terms of price action could look at some kind of morning star formation, Or if you wanted to go down even further, you could look at a 15-minute or a 5-minute looking for that change in cycle. So what would a change in cycle look like? Well, essentially what we've seen since the market rallied up above the 131.70 area price today, on the 15-minute we've just seen basically a fall in price, a rally, and then we're starting to see that next potential impulse move to the downside. So a change in cycle would look like a double bottom forming, then price creating a new high, and then we'd look for that next effectively higher low to then trade the market long. So that would be using a smaller time frame to see a shift in sentiment, those buyers come into the marketplace. So that's a trade on pound USD. Now we're going to go to pound CAD. We're going to go up to a higher time frame here. We're going to look at the weekly chart, and oh, my lines have disappeared, never mind. So we're looking at this descending channel that's been formed, where we can see price has moved and rejected several times here, and then we're just going to copy that trend line where we can see price has then come down, and we're testing this support trend line for the second time. Now obviously that's not enough touches for us to confirm that the market is going to reject, so we need to do something similar where we look for price to then give us confirmation that there's been a shift in sentiment. If we look at the daily, we can see strong bearish candles. Yesterday printed a doji, and then today we're printing an inside candle, all suggesting basically exhaustion, running out of momentum, but nothing confirming a move to the upside. Drop down a little bit further, looking at the 4 hour, this just cements that information that we just mentioned, that we are seeing a basically a reduction in selling and that shift in sentiment potentially happening, but we need to see price get above 164.60 area, somewhere in this region. We've formed a minor resistance level, so what we want to see now is price push higher. We've got then a change in cycle, and then we'll look to trade that first higher low, and there's going to be some lovely gains up for grabs should the market present that opportunity. I'm going to move over to the next pound pair that's giving similar sort of scenario, which is pound Aussie. We're going to again head out to the weekly chart. Just bear with me, and there we go. So looking at the weekly chart, I'm just going to remove a couple of these alerts. We don't need them in anymore. Going to remove these. All done. There we go. I just want a clean chart so you can have a look. Just pure price action, because price action is going to be there. If you can read price action and what the market's doing, it's always going to put you in the best seat possible to then be a profitable trader. You know, you don't want to be blinded by indicators and everything all over your chart. Read price, see what's happening, see where the turning points are, and look for the patterns that are forming, and then by all means couple that with your indicators if you want to use them, moving averages. I like pivots to a certain extent, especially when we're looking at things like S2 and R2, whether that's on the daily, the weekly, or the monthly, because it just shows extreme movements, and it's more for taking profits, looking for potential reversals, or not to take a trade because the market's probably overcooked. So we can see in here we've got lots of rejections down at this pricing point, and because we're thinking about pound seasonal strength, and we've seen such a decline in pound against the Aussie dollar. Aussie's been one of the strongest markets. It's a prime market for a reversal, buying the weakest, selling the strongest. So now we've got to look for that opportunity for the market to reverse. That's a shift in sentiment. We want to see those buyers coming into the market and effectively the sellers leaving. We're not seeing that at present. So just, you know, whichever way we look at it, if we were to sort of draw short-term trend line through here, you could argue that price has just broken through that. We could be a little bit more stringent and say we're going to use that as the trend line, and we're going to also look at this minor resistance level, a little bit like we said on pound CAD. So in this case, what we need to do is set our alerts for 1.76, wait for the market to break through, and then we'll look to trade that first higher low. All this is guys, it's being patient, it's applying the same principles, being disciplined, and not doing anything until the market gives us that opportunity. And again, there's huge returns up for grabs on this one, massive returns. So just be patient and wait for the market to present the opportunity. Fingers crossed it does, and we see that pound strength coming through. Oh, here we go on pound Kiwi. Again, something very similar. Let me just remove these drawings and I will show you what we're seeing here. So again, we have a long-term trend line that the market has been reacting to and has rejected several times, as we can see through here, back in 18, here 19, here 21 twice, and then current year we're seeing price testing it. Now again, we don't want to be too aggressive, but at the same point, if we see opportunity to get in and trade a potential corrective move, i.e. when we've seen price fail, we could look to trade this market. Now I'm already in this market, I'm offside, I'm in a negative position, as are some of the other traders, because we saw a double bottom formed. We had a buy stop above the neckline, and this little move here triggered us in. Markets come down. Our stops, we did arrange to have a sizable stop in terms of protecting ourselves in case the market did want to test these lows again, because we knew that this sort of double bottom wasn't a clear-cut one, but at the same point I thought, based on the reward that was available, which is a 5-to-1 just up into this area here, was worth the risk. In real terms now, what we should be looking for is anyone that's not in this market is price, a bit like pound CAD, pound Kiwi, pound CAD and pound Aussie, is to break that level and then look for the higher low with first take profits or extended first profits, you know, in and around 191. But there's huge opportunity on this, especially when we go back out to the daily, just to have a look at where price could potentially move to. So if we look, you know, this is where we were talking to 191, 193 in and around this area, but even, you know, talking around the 196, the 2 barrier, there's real room for this market to move a significant distance. If we then bring in our fibs and just say, right, well, where do our 50% correction, where does our 61.8 correction come in? Just below the 2. So there's no reason why we couldn't see those type of retracements on here, which, you know, if you're talking return from where we currently lie, that's a significant return. Barriers to watch out for would be, obviously, we've got another descending trend line here to watch for. We get through these early barriers and you're going to see significant upside on this market, in my opinion. But use, obviously, think about the timing tool in terms of seasonal analysis, where the market could potentially top out based on timing with seasonals. So bear that in mind. And last chart but not least for today is Aussie Yen. So we're going to go to the weekly chart. I want you to just look at what's happening here and identify these key structural points that have been formed. You can see 90 was a huge level, and you know, this was one of the huge levels we identified on the yen, where we'd look for a reversal trade. We did want to see it pop through there to then come back and reverse, but it went significantly higher, up towards like 95, just short of 95. Now if we go to the daily, we can see we've had multiple rejections of that trend line. We've had a evening star candle formation formed, but if we go to the hourly, one thing that I don't think this is just going to drop straight away, because looking at the hourly, this formation that we're seeing, this pattern, is very much a corrective pattern rather than a sudden drop in the market price. So I would look at this and I'm thinking that what we could potentially see here is another push to the upside, maybe back towards 93, test that area through here, and then we form effectively a double top or a lower high on the daily chart. And then when we get through this area here, 91, I'll be looking for that lower high opportunity to trade, and hopefully that will be the one that gives us some really nice pips down to the support of the bigger time frame pattern. So that's it for today, guys. Hope you enjoyed the video, the content that's being published. If you did enjoy the content, please make sure you give it a thumbs up, share it, like it. And the reason for this is the more people that view it, the more people that like it, it's going to get distributed more, and it's going to benefit more people in the trading world. And obviously that's a big thank you from me. We do want our content to be put out there. And on that note, guys, we're going to see you tomorrow. So have a fantastic trading day tomorrow. Hope you can find some nice winning trades. Stay disciplined, never over risk, and leave comments. We always want to hear your feedback. Thank you and good night.